to date with the latest news and information from Propertymark.
Welcome to Propertymark Pulse. Well, it's certainly been yet another busy week in the property sector, that's for sure. So let's talk inflation, let's talk base rates, let's talk ONS House Price Index and Rental Price Index, and that's just the start. We've also seen the announcement of a national housing bank. UK finance state there has been a massive swing in the popularity of interest-only mortgages. Plus, we had Rightmove reporting the number of properties worth £1 million and above. But has this number gone up or down? Stick with us and you'll know in less than 5 minutes' time. So the 18th of June saw the latest inflation figures shared. These remain really important, and especially as the decision on the base rate happened a little over 24 hours later. Now, there has been a lot of confusion over last month's figures, which stated that inflation stood at 3.5%. However, it turns out there was an error in gathering that data, and in fact, last month's rate of inflation should actually have stood at 3.4%. However, no official correction was ever made to the figure, and for the purpose of the records, it still claimed that inflation stood at 3.5% last month. So when this month's numbers came rolling in, it was claimed there was a 0.1% drop to 3.4%, when actually probably it should have just said things have remained steady. Either way, we're currently nowhere near the Bank of England's target range for inflation, which they would like to see down at around 2%. Now, why is this even important? Well, the rate of inflation is a key measure on how well the wider economy is under control and performing, and the Bank of England used this to help steer the base rate, which of course affects savers and borrowers massively. The Bank of England have dropped hints they may consider base rate cuts across the summer months, which is especially important for the housing market, which witnesses one of its busy periods while the sun is booming. However, the Bank of England will only ever consider base rate cuts if they have the confidence to do so, and we found out this week they chose by a majority of 6-3 in favour of holding things as they currently are at 4.25%, which is likely not what those on tracker mortgages and those looking to take out brand new mortgages will have hoped for. But again, all eyes will be on the Bank of England for the next decision in early August.
We are Propertymark.
Next on our list, this week brought ONS figures that are key indicators of the housing sector. Firstly, let's talk about the ONS House Price Index. Now, while the figures are in slight lag, it did tell us that house prices for the month of April for the entire of the UK saw a month-on-month increase and a year-on-year increase to £288,000. And when you consider everything that's happening across the entire globe, it underlines just how resilient the house market actually is in all nations across the UK. We also saw numbers released for the ONS Rental Price Index. Now, this one was a really interesting one. Now, we've seen numbers starting to show a slowing down of the average UK monthly private rent. It increased by 7% to £1,339 in the 12 months to May this year, which is down from 7.4 in the 12 months to April this year. Whether this is a one-off or a start of a trend, well, it's something we'll be watching very closely as the year plays out.
We are Propertymark.
Now, a very interesting and generally well-received piece of news this week has been the UK government making the announcement they want to set up a national housing bank. But what does this mean, and why is it potentially positive news? Well, it's hoped it will unlock nearly £16 billion worth of new public investment and will help build over 500,000 new homes. In addition, it's also hoped it will contribute to unlocking a further £53 billion worth of private investment in much-needed housing. It's certainly an interesting proposition, and for those in England, we'll certainly be keeping you updated as things progress.
Propertymark.
Also this week, UK Finance published a report stating the number of interest-only mortgages has tailed off significantly over the course of 2024. Interest-only mortgages can of course be an attractive proposition for some if the conditions are right for such an undertaking. However, we have witnessed a potentially unfavourable mix of higher inflation and elevated base rates over the last few years, which may have made interest-only mortgages less attractive and potentially more of a risk to consider. Again, if we see base rates dip and further house price growth, we may see such products gain popularity again. We'd be really interested in your thoughts on this. Drop us a line at studio@propertymark.co.uk.
For more details, check propertymark.co.uk.
Now, we all know over a prolonged period of time, house price growth has always trended upwards, and investing in property has always been viewed as a generally sensible long-term move. However, one thing that has been talked about this week is that Rightmove have reported the number of properties coming to the market that bust the £1 million barrier has doubled in only 6 years. And if you consider we've had a pandemic and a whole load of economic turmoil, that's some pretty impressive figures. Cornwall and Somerset saw some of the biggest growth, and probably unsurprisingly in many ways, London was identified as having the most £1 million plus properties when looking at all areas collectively. Once again, a big thank you for listening. Your thoughts, views, ideas, observations, they're very much welcome and appreciated. We want you to be a part of this, and we'll soon be launching on all the most popular podcasting platforms as well. Drop us an email to studio radio@propertymark.co.uk and let's have you in on the conversation. We shall catch you again, so keep checking propertymark.co.uk/pulse for the latest.